Hey guys, Ken Calcutt here with Cornerstone Financial Management. Hope you had a great Thanksgiving. It is early December as we shoot this. I wanted to give you a quick market update and talk about what we're seeing for next year. So picking up where I've left off the last couple of videos, the 10-year Treasury yield is a key number we're watching. This is the interest rate that we would get on a 10-year government bond today, 4.177. It's a really low number. When we last shot, interest rates were climbing quickly. We got north of 5% at the peak. As interest rates were going up on the 10-year Treasury, stocks are going down. The opposite has been true the last 30 days, which is good news. Interest rates have finally started coming back down on the 10-year, 4.1. That's the lowest we've seen it in probably 2 or 3 months. Stocks have had a very nice rally while interest rates have been coming down. Bonds have also had a very nice rally, which is great to see. So the last 30 days in both bond and stock market has been very, very good. Let's jump over and take a look at that. Okay, so here we're looking at the S&P 500. Now, this is just general stock market, but what we can see very clearly here from the beginning of August through October, we had a pretty sharp drop in the stock market. That is the opposite of what we saw with interest rates on the previous chart. They were going the opposite direction for that 90 days. Now we've seen the flip side of that. Rates have been coming down for the last 30 days. Stocks have been going up very sharply for the last 30 days. That inverse relationship is still in place. I think that will continue for a while. So the stock market is generally in a pretty good place here. I'm cautiously optimistic going forward. Looking into next year, I do think the Fed is probably done raising rates. They might do one more hike, but I think that would be it at the most. I doubt they'll do any. So I think the rate hikes are over. I think there's still a possibility of a recession, but I don't necessarily think that's going to be devastating for the stock market. We've got to wait and see. We may or may not have a recession, but I think it's possible. But even if it shows up, that doesn't necessarily mean the stock market does what it did last year. So we're going to see how this plays out. Important to stay diversified and balanced in these situations because we simply never know which way things are going to go. But if you have any questions about your account or how things are going, reach out to us anytime.